first thing I need to do is I need to take a look at my Netflix position, because I've got a butterfly that is going to be quite profitable for me. Need to take a look at this. This expires today, and I got the move, but I got the move a little too much. I needed to actually sell back off a little bit, because on market open, I was actually right at 77.35 pre-market, but you can see it jumped up $10 as soon as the market opened. So it's starting to move a little bit too far against me.
Yeah, that Netflix always move it around 10%. Yeah.
Yeah, let's see what I want to take. Let's see if they'll give me $400 for it. If I can get out for $400, that'd be about 25% of max profit. Really, I just need a down move at this point. I need it to, which it'll come back down to earth here in a minute. I'll probably be able to get out at that price, because I usually, when the market opens like this, and it was already up 45 points pre-market, and then you just added another 10 points to it, you got to assume some people will start taking profits on it. So if this thing comes back, say 5 points back down, it should trigger that take profit order. Wow.
Just be patient. You'll be rewarded.
Yeah.
We never know. Yeah.
Oh yeah, I mean, I've got till, at least until an hour before close before I really need to do something. Mm-hmm. I really need this to come back like 15 points back down. Now, I don't know if I'll get that. I did not think it would be that strong, because it already opened up this morning $45, and then to add another 20 to it. Wow. And I actually mentioned this yesterday, that you got to be careful with Netflix on earnings, because it always does this. It always has these crazy big moves, like this gap here. A lot of people got hurt in. This gap here, a lot of people got hurt in. It makes some crazy moves on earnings. But at least I did a defined risk trade. I would have never done anything undefined risk in this. I don't know. It looks like right now they'd give me about $300 for this position, possibly. The problem here is, being that it's such a short dated trade, there's going to be so much gamma. The P&L is going to swing around wildly, because just the slightest dollar move up or down right now is going to affect this position by $100 up, $100 down. Let's see if they give me $300 for it. Yeah, I'll take it. I'm out of it.
Already?
Yeah. Well, I spent $140. I mean, I bought the spread for $140. I made 200% on it.
200 bucks. That's okay.
It was a cheap spread. Yeah. It was a very, very low probability kind of trade. I probably didn't have more than a 15% pop on that trade. And the fact that I really kind of nailed the direction right, it was actually in the center of that butterfly on open, but then it quickly moved outside of it. So I was like, well, I'm still close enough on the wings, I was like, let me go ahead and make sure I lock in a profit, because this thing may go up the rest of the day, and I don't want to make nothing on the trade. Not on such a low probability trade anyway. I got to lock in something, because you don't hit on those kinds of plays very often. So when you do, I got to make something on it. That's pretty much my positions this morning. Anything you guys are looking at? Sam or John or Jim?
I have a silver position. It's doing good.
Yeah.
That was an idea from the Tasty guy. That's a short put.
You doing the ETF SLV, or you doing the futures SI?
Yeah, SLV. Yeah, just the ETF.
Yeah, I've had some positions on an SLV recently. I had a strangle that worked out last month. I go back 2 months. I guess that was the only position.
Already up 22%.
Yeah.
Just put it yesterday. I saw it on the Tasty newsletter. Say, okay.
Yeah, and I've been thinking about selling. I've been thinking about putting on another strangle since they have worked out. You get volatility. Yeah, when you get volatility like this, it's you want to sell both sides to get double that volatility exposure when it comes down. Plus, you get twice the theta too. People don't realize that. If you want to increase your theta, instead of selling just a put or selling just a call, when you sell both, you get twice the theta on the trade. Obviously, it's at the high end of its range. The way silver and gold and copper have been acting, I'm not confident that they're about to sell off anytime soon, so I would have no problem doing a neutral trade. I'm using plenty of my buying power right now, but I mean, I could. It's a 14 delta put. If I do 14 deltas on the call side, 63 cents credit on a buying power reduction of 300, then adjust the contracts to whatever size trade you really want. You could sell 2 or 3 contracts, you know. Heck, I could sell 3 contracts, I'd get nearly $2, $189. On a buying power reduction of only $900. Great thing about this is the buying power effect on the SLV ETF is not great as far. I mean, it's actually really good. It's low. I guess the brokers don't consider this a very risky instrument to trade, so you know they don't charge you out the ass as far as buying power like they do on that TLT trade I took the other day. The buying power on TLT was actually kind of high.
I actually have a question.
Mm-hmm.
So obviously financing account is difficult and it's hard to really get the money. For a smaller account, not in terms of risk, because that's not really easily predictable, but in terms of price, what exactly would be the best to start with if 10,000, for example, isn't necessarily easily reachable?
Sure.
Like, what general price range are we talking about there?
So you're saying you couldn't fund an account with 10 grand?
Not quite.
Okay. Well, what kind of amount do you think you'd probably be starting with?
I could probably pull off 3,000 in a year easily. Like,
Yeah.
of course, having everything else in my life dealt with, of course.
Yeah. Well, you'd have to fund an account with at least 2 grand to open a standard trading account using margin. Yeah, you want a margin account because that'll give you even more buying power, especially with stocks. So you got to start an account with at least 2 grand. But if you could have started with 3, you're asking what could you trade? Was that the question? Or
In terms of price, yeah. Like, what general range of value should I be looking for in order
well,
to
with 3 grand, you couldn't trade like with options. You couldn't do a lot of naked options because options represent 100 shares of the underlying stock. With only 3 grand, I mean, the only stocks that you could take assignment of would be stocks that were $30 or less in price, right? All right, so I'm going to pull up a calculator here. So if you have $3,000, you know, remember that if you got exercise or assigned on any option, you're going to get 100 long or short shares of stock. So if you start with $3,000, let's divide that by 100. You know, you get 30. So $3,000, you could only buy 100 shares of stock in a stock that is $30 or less. So you can't really sell naked options in anything unless it's a really cheap stock. And even $30 is too big for a $3,000 account because that's essentially 100% of your account. Realistically, you couldn't do naked options in anything probably more than $10 for a share price. But even then, I wouldn't do that. If you're only trading with $3,000, what you're stuck trading is defined risk trades, credit spreads, debit spreads, iron condors, and you have to be really picky on those. For example, I'm in Boeing right now. Could you trade a put credit spread, for example, in a Boeing? Well, this example put credit spread here, and I'm just picking some strikes as an example. You'd receive 124 credit on a max loss of 375. Could you risk $375 on one trade? Well, on a $3,000 account, that's a pretty big risk because that's like 10% of your account on that trade should you lose on that trade. So really, you have to be kind of selective on what you trade. You should have to, you should really find stocks that have dollar-wide strikes. I don't know if am I going to have dollar-wide strikes in Amazon. Well, if I go into one of the weekly expirations, I might. Yeah, no dollar-wide strikes. But what you have to do, you have to trade spreads, iron condors, and you have to find stocks that have dollar-wide strikes. Find something a little cheaper. About Uber. Please tell me this has dollar wide strikes. No, but it has $2.50 wide strikes here. And now you could do a put credit spread that's much cheaper. Because where before I was having to go $5 wide in Boeing, I can go $2.50 wide. Now this is a much smaller trade where I'm getting a credit of 60 cents. Max loss is only 190 rather than 370. Basically, we cut the trade in half. So yeah, you're going to be really restricted on the underlying stocks you can trade. You need smaller stocks. You preferably have stocks that have $2.50 wide strikes or even dollar wide strikes or less. So you could really make these spreads small, more appropriate for that account size. For a really small account, you do have to take some risk though, just because your account's so small. It's almost impossible for you not to risk a pretty good chunk of money on every trade. But still, I wouldn't want to risk more than 5% on any trade, even with a really small account. So you have $3,000 to start with, and you figure, I'll risk 5% on each and every trade. Well, you're risking $150 a trade.
That is pretty tight.
Yeah. So that's why it's tough to navigate with a small amount of money. That's why I would say, 10 grand becomes a little bit more manageable because, if I had 10 grand times 5%, we still stuck to that rule. Now you could risk $500 on every trade.
How big of a difference do you think if we went up to 5K?
Oh yeah, a big difference. The difference between 3K and 5K is a big difference. Yeah, so 5K, 5% of that would be $250. And honestly, if you 5%, because it's still a small account, if you risk like 7% of your account, it wouldn't be the worst thing in the world. 7% on a 5K account would be $350. And now you could trade pretty much anything as far as defined risk spreads. Now, even like if I go back to Google, now you could do those $5 wide spreads. So if I go and do a $5 wide spread here, you're risking $128 buying power, or max loss 372, which is pretty close to that 350 number that we came up with. So, this is doable. On a 5K account, this trade would be okay. On a 3K account, I think it's just too big of a trade because all it takes is a string of 4 or 5 losers in a row, and your 3K account is now like a 1K account, right? So it's just too risky.
All right, thank you.